I'm Michael Flatley. I'm a wealth manager. I've been in wealth management for 18 years. Started my career at Deutsche Bank, the private bank in New York. Was there for 15 years. Towards the end of my time there, I managed $3 billion in client assets and about 500 accounts. And from there, I moved on to Merrill Lynch, where I was a senior equity portfolio manager for a team that oversaw around $1 billion in assets. During that time, I started curating different AI tools to incorporate in my investment process. And, I was getting a little bit more creative than I think the wirehouses and the big banks were ready for at the time. I was ready to make a move and to really explore this new process and put it into action. And so I joined Farther Wealth Management in March of 2025. And as soon as I did, I opened up my own account, put my own money into it to get a track record going. I'm not just waiting on analyst reports and different reports to come out. It's more live feed stuff. Tens of thousands of data points are being analyzed and given different scoring and helping with this process and just being more efficient.
So, Michael, how do you incorporate AI into your practice kind of on a day-to-day basis?
Yeah, day-to-day, well, I have alerts set up. I use level fields as a starting point for a lot of my investments. The events that are set up really help to structure that. I have some portfolios that are kind of a multi-strategy that use different events that level fields has. Level fields is a great starting point for me because I found different events that have a high win rate, and then I go in and I fine tune it based on what I'm looking for within that event. I could choose companies that have a high profit margin or lower volatility or whatever characteristic I'm looking for within that event and set up alerts around it. If I start with a 75% win rate on the event, I typically will end the event with finding names that have a 90% win rate. Then I create alerts and check to make sure that there are no new companies that enter that event. Level fields is essentially a starting point for the majority of my funds. Then I use AI tools external to that to come up with the weightings and the composition of the accounts. What's interesting is I can usually spot rotations before they happen because the scoring will show some of these names, that may be ranked high at the beginning of the month, slowly creep down. As an example, late last year, Microsoft was, slowly fading down from just give a number score of like an 8. And then over the couple months, I saw it tracking down to more of a 3 or a 4. So I reduced that position. During that time, I went back and I tracked it, and Microsoft sold off by about 12% in that month. There's no tax impact. I'd rather not hold it while it's down 12%, and then I could lower my average cost by buying it after that impact. So yeah, I use it daily in a lot of different ways. I'm not day trading, but my focus is long-term growth.
Do you find the performance is better doing it this way?
Yes.
So
far, in the back testing that I have done prior to actually putting this into practice and into execution, I would see alpha of around 8 to 10% annualized. My goal is to make as much money as I possibly can for my clients without taking on excess risk. In most cases in these portfolios that I'm building, my beta is lower than what the benchmark is. The other risk metrics, Sharpe ratios, Sortino ratios, are all better than what is expected.
You found the tools cut down your management time, your oversight time, your monitoring time by much?
Yes, pretty dramatically. Prior to this, I was reading analyst alerts, looking at consensus of analysts expect for price forecasts and other things. And without technology, it would be extremely manual. Prior to this, I had an Excel spreadsheet that I used where I'd feed live data and characteristics and metrics of these stocks. Again, have to read a lot. Now I get a snapshot, essentially a too long didn't read overview, executive summary on everything that I'm doing. And it's just super efficient. It's not replacing portfolio managers, it's assisting them, right? And it's helping to support what they do and to make well-informed decisions. It's just scraping so much data, making it more digestible to me and seeing a fuller story for these companies.
Book a free 15-minute call with Michael Flatley to see how his investment process may apply to your portfolio. Click the link below.